Matt Smith here with Family First Life. I'm with our $1 Million producer, Brad Allen, and we're going to cover how to eliminate shopping from your clients, as well as when you meet with an unhealthy client, what to do and how to create value over price and still capture that sale. So, generally speaking, a lot of times when you've got people that are shopping, it could be maybe an internet lead, it could be a social media lead, it could be a direct mail lead, because what happens is people fill out multiple forms because they want to make sure they get the best offer. So when we're talking about trying to eliminate shoppers, one thing I've noticed is, generally speaking, the younger they are, the more that they have an online presence and the more that they want to do shopping. So millennials kind of fit into that category. Yes. Although there's plenty of people that do the same thing no matter what age there is. But I think it's important to understand what types of buyers you sit in front of and how to operate in that as well. So when we do this, and Brad, you said it best, and I'll let you go with this, but what are some things that you do to eliminate shopping?
So one of my favorite things to say with somebody is your price that you're looking for is not your price until it is. So when we go through the financial inventory and I'll hear people say, well, I just want to know the price. I just need a quote because I'm looking around. It's like, all right, well, I'm a broker and I have, 12 A-rated companies, and we can look at the cheapest, the most value. My job is to see what you qualify for, and that's the most important thing, because life happens while we're looking around. Yeah. The most important thing is to get you qualified for something. So price is interesting, but it's not your number until it is. Quotes are really meaningless. And I say that again and again in the house. Quotes are meaningless until they're not.
Yeah, for sure. I think one of the key components is to say, I could have chose to be a captive agent. I chose to be a broker. We've got 27 different A-rated insurance companies to choose from. You cannot mark up insurance. It's all regulated by the state. True. Now, the key component to me is that peer pressure. You use the example, I'll let you explain that too, is winning that silver award. Right. But when you lump people together and say, based off of your current circumstances, people that purchase their first homes, here's the options and here's why they do it. And then also what's huge, besides that peer pressure, is if you do not story, a lot of times people don't understand, if you don't bring out emotion, right, then you get shopping, because without emotion, right, there's no urgency. Without urgency, there's no reason to move forward. So emotion is what drives the urgency to actually eliminate shopping. So if they know that you can't mark up insurance, right, and you've pitched it with certainty, you've story told, you put them, empathized, identified the problem, right, gave the proper solution to their problem, that's when you start to eliminate the shopping and they trust in you. Yeah. So those are some key factors as well. Anything else you can add? Kind of go over your silver, same scenario.
So on the shopping around, I sat with a gentleman about a year ago, and he said, "Can you improve a price for $3 million?" He was 54 years old. I'm looking for $3 million, and I need it to be under $700 a month. And I've done this a little bit. And so I said, so you have a quote already? And he said, I don't want to talk about that. And I said, okay, well, let me just check. And I went on to my mobile app for Mutual of Omaha, and I did 54-year-old non-smoking male, 10-year term, $3 million. And it was $654 a month. And I said, so are you getting quoted about $650 a month? He said, yes. And I said, so you're 54. And statistically, you will outlive a 10-year term. That's why it's so inexpensive for $3 million. Why do you need $3 million? He said, well, I have 3 daughters. I don't live with them. They're back in North Carolina. He's in Seattle. And I've been an absent father, and I just want to make up for it. And I said, well, so that's interesting. I'm sorry to hear that, but let me show you something that's better. And he's like, sure. And so I said, so 300,000 is more valuable than 3 million. This is to your storytelling thing. Yep. And he said, how is 300,000? I need to leave my kids. I need to leave my girls $1 million. Right. And I said, so a 20-year term, on 300,000. It came in at like $564 a month. So this was on an internet lead. Internet lead. And I said, so at the end of the term, you're going to get X number of dollars back, and you will have had 20 years to restore the relationship with your children. And if you die in the term, either you do or you don't, nobody's going to complain about 100,000 versus a million. You're still taking care of your kids. This way, everybody wins. So on a short term, no living benefits, it's just there's no comparison. So Matt, you taught me early on, when value exceeds price, people move, right? Storytell. Show the value, solve a problem, understand exactly what people are looking for. Because I told this gentleman, I said, hey, Bob, 10-year term at that price, it's 110 grand. Just give me the 110 and I'll take it to the river with you and we'll throw it in there, because your kids are not going to see that money. I mean, that's just a waste of your time. So let me show you something that you have no chance of escaping value. And his words, quote, does everybody know about this?
That's a buying quote.
And I said, everybody I talked to. Yeah, absolutely.
No, that's great. So yeah, just understanding, if you're with those practical people, because those are that type of buyers where you have to explain things in more detail, right?
Right.
Make sure they understand what is out there. The last thing I would say as far as eliminating price on the table is explaining fully underwritten versus simplified issue. Fully underwritten is where, you take your blood and urine, dig into your medical records, have your parents' history, and if your bill's off, if you're, taking a medication or two, you're going to get table rated significantly. So I can quote you the best price. The problem is when you come to the car lot and there's one at this price, then you're going to see that we don't have that vehicle in stock, and now you're in a completely different vehicle.
Yep.
And this is why simplified issue makes sense, because the price will be the price. We still have to get you qualified,
exactly.
But it makes more sense for your specific health reasons. And then once they understand the landscape of fully underwritten versus simplified issue,
right,
they understand how to move out of that product and why simplified issue makes the most amount of sense for them. So, great job there as well. Let's pivot now to unhealthy client close.
Okay. Yep.
This is a type of lead where new producers fail and can't stand it, quite frankly.
Yeah.
But the veteran agents,
Yeah.
they want to get their hands on every single unhealthy client at whatever age.
Very motivated.
Most of the time it's older people,
right,
and most of the time it's somebody that's wanting 500 grand of life insurance online, or
right,
has a $300,000 mortgage and wants that whole mortgage paid off, but they're only eligible for a $30,000 final expense policy because maybe they have a stent, or maybe they have some sort of heart history, or maybe they're on oxygen, or maybe due to some health condition they can't get simplified issue term products or any sort of permanent product other than final expense types products. So that's an unhealthy scenario. Brad, what have you done to help explain that and capture the sale with an unhealthy client?
So I would say I typically see one of two unhealthy type clients. Either they're young and they have something, so they can't get into a whole life policy that has a more relaxed underwriting guideline. Mm-hmm. So they're under age 45.
Yep.
Because Mutual of Omaha will go down on the living promise to 45, everyone else 50. So they're too young to get into a whole life, and they're too sick. So then I put them into Mutual of Omaha Guaranteed Advantage Accidental, and I simply say that per the CDC guidelines, mortality table, number one cause of death at your age group. Good news, bad news, Mr. Smith. Good news. Good news is the absolute, you qualify for this. And good news, bad news is it's the number one cause of death at your age group. It is just accidental. And I can come back when you get a little bit older, but it's the number one cause of death. So it's the most suitable recommendation I can get for you. And the really good news is it's a return of premium. So if you get to the end of the term, you are still alive, then it was just a savings account with an accidental death benefit attached to it. And it just happens to be the most common reason that you're going to die at this age range. So I do a lot of accidental for people like on dialysis or they have some health qualification that doesn't allow them to be in term or universal, and they're too young for whole. So that's number one. Number two would be somebody that's just, older and they've got a lot of health problems. Could be recent stroke, cancer, something like that, where, typically we do the instant approval with an EAGLE, an Americo EAGLE, and then, American Amicable Prosperity all the way to AIG. I sat with a couple, it was about a week ago, and she was schizophrenic and she was COPD. And I just stopped there.
Sure.
I think there was a lot of other things going on. And the husband said, we just want 20,000. So I knew it was AIG.
Right.
And that's a really solid client. They will be on the Christmas card list. Right. They loved me sitting with them. When I set the appointment, they said, you might as well not waste your time. We're uninsurable.
Yeah.
And I said, I haven't met anybody that's uninsurable. As long as you're within this age range, 14 days old up to 89, I got you.
Yeah.
I can find something for you for almost every situation. Let me come and sit with you. And they were so happy. They were really happy.
That's great. I think one of the key components with an unhealthy client is you'll have scenarios where, 30,000 isn't enough for me. And it's like, you got to realize, first of all, 78% of Americans live paycheck to paycheck. They most likely don't even have $30,000 in the bank. Right. And the biggest thing I tell people is like, it's again, painting pictures, storytelling, all that stuff. But it's like, hey, listen, you've got $7,000 saved up. That's your life savings at age 71.
Yeah.
If I put $30,000 tax-free into your account right now, both of you would be jumping for joy. Would you not? Would you agree? Because we just, basically quadrupled your net worth overnight.
Right.
So, John, when you're gone, why aren't we going to give Mary the exact same feeling and have her jump for joy and give her a $30,000 check to give her time to lose your income, to give her time to make the mortgage payments, to give her time for all that stuff? The other scenario that you see when people have mortgages is you can paint a picture where, let's say, $30,000 is $254 a month.
Right.
And how I've always explained it, and I draw out a graph, but I say, listen, your home is appreciating over time. And this is where you, again, kill them on paper in the house so they understand, what this is going to look like.
Right.
So your home appreciates. You're paying down your mortgage like this, pay a lot of the interest up front, then it falls off.
Right. John,
John, you're 71. Let's say, unfortunately, you'll die at age 81.
Right.
Right now you owe $250,000 on your house. Your house is worth $300,000.
Right.
Okay. And in 10 years, let's say your house is worth $350,000. Well, in 10 years, you're going to owe about $150,000 on your house because you pay a lot of the interest up front. So we got $200,000 worth of equity there, John and Mary. Right. And what this $30,000 for $254 a month does, it's not the 30 grand. It's the 30 grand plus that 200,000 is why you're paying the $254. So John and Mary, can you see why this makes financial sense? Absolutely. And now you close that deal. Yep. But without the explanation and the storytelling and taking a point and saying, let's say you die here,
right,
then we're really not living through that scenario and saying, what is it really going to look like?
Yep.
So once again, emotion in sales brings out urgency. 95% of people make decisions based off of emotion.
Yeah.
So understanding you've got to make logical sense, understanding bringing emotion, that's going to create the urgency, and understanding that they're really not in a financial position, Brad, to say no.
Yeah, and nobody complains about tax-free death benefits, even if it was $5,000. And this is something I do say in the house. When they say, well, that's not enough, I say, well, when I deliver death benefits, it's a $10,000 swing. Instead of a $5,000 bill that somebody has to pay, they're getting a $5,000 check. So that's a 10K swing. And I haven't met a single person that says no to tax-free, no probate, fast cash, regardless of the dollar amount.
Absolutely. That's strong. That's great.
Yeah.
Well, I hope this video finds you well. I hope it brings more success to you, and we look forward to working with you soon. Thank you, guys.